So why do so many investors think Bitcoin could replace gold? Well, we'll get to that in a second. But first, when inflation rises, gold historically moves up, but not instantly. Gold is that one friend who doesn't respond until you're already out and he says, "Hey, I'm here." Gold tends to hold its value best after people realize inflation is real, once confidence in currencies start to fall. According to the chart, gold has risen significantly over the past few years. I'm sure you agree, as it's gone up, confidence in traditional money has gone down. Bitcoin, on the other hand, reacts like an adrenaline junkie. When inflation fears start, Bitcoin doesn't just move, it erupts. But when central banks raise rates and tighten money supply, Bitcoin crashes even harder. Gold sips coffee, Bitcoin gets an energy drink through an IV. And that brings us to the biggest difference between the two: volatility versus stability. Gold's stability is its strength during chaos. Bitcoin's volatility is its opportunity during transitions. We'll come back to that in the part about how to actually use both, but keep that in mind. There's a reason central banks, the very institutions creating inflation, are buying record amounts of gold right now. That's not just a fun fact, that's a signal. They know gold is an asset that doesn't rely on trust in the financial system, it's outside of it. When countries worry about the dollar losing dominance, they buy gold. When investors worry about money collapsing, they buy gold. Gold is the ultimate insurance policy: boring, heavy, reliable. The downside, it doesn't grow as much as other assets. Here's gold versus the S&P 500 chart for your information. Long story short, top US stocks by market cap won heavily, especially since 2015. Gold protects wealth, but it struggles to create it. So what about Bitcoin? Bitcoin is the opposite. It's not just protection, it's born from what many would call a rebellion. It thrives on uncertainty, on people losing faith in traditional systems. When governments spend too much, when banks fail, when currencies get shaky, Bitcoin becomes the go-to. That's why its price moves like a roller coaster. Every new wave of uncertainty brings new believers, reluctantly or enthusiastically. But here's the catch: Bitcoin also relies on liquidity, the same liquidity central banks control. So when the Fed raises rates and money gets tight, Bitcoin suffers. It's like Superman needing sunlight. Without it, the power fades. That's what we saw from late 2021 through 2022. Inflation was high, but Bitcoin fell because interest rates were being cranked up. So while both assets are inflation hedges, they hedge different parts of the story. Gold hedges trust breaking, Bitcoin hedges trust transforming. Now remember in the last video when we talked about how inflation actually helps make debt easier to pay off?